All right, testing, 1, 2, 3, testing, 1, 2, 3. Let's go. So let me remind you that trading is risky, not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results. But please stay small, stay humble, focus on the long term, and never risk money you cannot afford to lose. Ni hao ma. Good morning, how are you? Welcome to the Forex.Today YouTube channel. My name is Wayne McDonald. I am a currency trader. I love trading currencies. I've been doing this a very long time. It's still pretty cool. I still like it. So I'm here to share my experiences with you. Good, bad, and the ugly. I don't know. What's the reason for that? Maybe there's something you can learn, something you can pick up, something you appreciate that you take on your journey, or maybe you just find these videos fun. Maybe it's exciting. Maybe it's funny. Maybe it's just something to do while you're watching your charts. Whatever. It's better than being alone, I guess. So welcome to the Forex.Today YouTube channel. Please like, please subscribe, please leave comments. Please treat your fellow currency traders in the chat with dignity and respect. If you're here for, I don't know. I think some people show up. Why do some people show up? They're like, I lost all my money today. What am I going to do? What should I learn something? Should I do something? Like every once in a while we get those people. Like, what are they doing? It's really strange. But anyways, if you're here to learn and to improve and find success, you got some pretty kick-ass people that are in this community. So whether it's me or support from others, it's really cool to have a circle, a band of brothers and sisters, if you will, a circle of knights, a round table of knights, whatever. So good to have you here. Ask questions, get involved. Like I was saying, check your naked, take a video at the door. If you're a spammer, we're not interested. Okay? But cool. So we can do technical analysis. We can do fundamental analysis. We can do trader psychology. We can just sit and watch the markets. But anyways, if you got questions, let me know. What else? Thank our sponsor, tradersway.com. You thank them by simply going to tradersway.com, opening up a demo account. That's that. Then you should test them out. Check out the execution speed, check out the spreads, check out the swaps. All good. Good. Checking off the list of things that you want from a broker. But think about it this way. Trader's Way is investing into your success now. And once you feel confident on your demo account that you have the skills and that's required to be a success, then you open up a live account. Isn't that cool? How they're investing into your success now with the hopes to just out of loyalty and respect and common sense, then you take the relationship further and trade real money with them. Thank you, Trader's Way. Coolio. Hang on. I got like so many windows open right now. It's a little bit silly, actually. Got to move this over there. Got to move that over there. Okay, I got all kinds of things going on. And in fact, I want to do one other thing too. Hang on, Bubba. I want to do one more thing. Okay, that should work.
Stop trading these dog crypto. Put on
Wow, amazing. These ads. All right. Cool. So, good. Nice. Now I got like mega windows open. And I got my drawing tool. Cool. All right. So, let's start here. What currency pairs would you like me to cover today? What's your number one biggest concern? Euro dollar. Makes sense. Johnny says, what takes precedence? Highest time frame. Everything one by one. Your oil didn't work out? Probably not. No. I think that little scalp, yeah, irrelevant, right? But yeah. Gold, Bitcoin, USD ZAR, gold, Great British Pound, United States dollar, Canadian dollar, yen pairs. Any pair also okay. Some Swissy, sure. European euro. Cool. All right, well, right now you can see I'm in scalp mode. Okay. And earlier, you can see we're kicking off the 73, and now we're below the 73. Okay. Little 5-minute scalpy scalp. Okay. Now we're hitting this big, fat pivot. And obviously somebody scalped off that. Okay. So now the question is, are you going to be a bull off of that line? Or, right? The only way you could have been a bull off that line is if you were already a bull and you're waiting and waiting and waiting and waiting and waiting. Okay, so then you'd be thinking like this. So that's your thought process. But one thing, I'm not sure how you work it out. If you're thinking that, when do you make the decision to actually do it? Are you using technical analysis in the sense of like a pattern? Are you, or of course, or a double bottom? Or are you doing things like waiting for a change in direction? So I have mine automatically plotted, obviously, but you could just be doing this and then manually adjusting as you go. And are you waiting for, right? Remember, y equals mx plus b, m being the slope. So you're looking at rise over run, which is a fancy way of saying, are you waiting for this to, instead of trading down, negative rise over run, to positive, right? Which would be this. Okay? Okay. Many pairs were up monthly. Yeah, but that was like, we talked about that on Monday. It's Thursday now, right? So, yeah. As soon as I belong, it's time I disappear. Cool. Anyways, cool. Nice. Anyways, that's what I've been playing with. Let's go to currency indices. Okay, what do you think? Euro strength? But dollar strength, Swissy strength, yen not weak, CAD weakness, Kiwi weakness, pound. What the heck is this? Yeah, this is a big risk off. Yeah. This little thing, you don't know when to pull the trigger. Yeah, I know that. Well, Johnny, you probably only have the basic toolkit. You don't have the complete toolkit. What do I think of Eurocad? I don't trade crosses, but I could see how in the moment that makes sense. But I couldn't tell you if it's going to be like that for the next year. So if you were scalping today, yeah, I could see that. But why Eurocad? Like you could do Euro Kiwi, you could do Euro Pound. I think Pound looks even weaker than CAD. Kiwi looks even weaker than CAD. So why do you pick on CAD? Why not Euro Aussie, right? Okay, so you could just simply go here. Okay, find what you want to do. What you want to do. What you want to do. So the question was Eurocad, wasn't it? So Eurocad. The play that you see here. First of all, it's still more down, and there's some short-term euro up. I get that, but you got to look at the bigger, right? The bigger market, if you will. So right now, this is your sell zone. So if you were truly like I said, I'm not a I don't want to be a relative strength trader. Okay, that's why I don't want to trade crosses. I want to trade macros, macro trends. Okay, but if you were trading this on more of a trend basis, there's your sell zone, and here's the exit. So on Monday, you would have sold up into here, and your target on Monday would be here, and you'd be out. So that's why you're like, well, how about Eurocad? Like, I don't know if you're asking me about the trend down, or if you're asking me about this micro move up, when I believe, or let's say in my point of view, like everything is right. There's nothing wrong in trading, right? What I preach is the expectation of this move here. Okay? So I'm all about that. Okay? This is the part I'm all about. Now, I think because this is across, the macro trend is harder to play. And even, right? So anyways, I'll just leave it at that, because I think if we have macro risk on, Euro will go up, but so will CAD. CAD will go down. Euro will go up, and generally you'll have sideways. Okay? So that's why I stay away from it. But if you were going to trade it, I would trade it this way. Although I couldn't really explain why this is happening. I mean, it's sort of like one is strong and the other one is stronger. I'm trying to get like something weak and something strong, right? And then, but if you were going to do it based on technical analysis of a trend, you'd still be more down than up. And even so, then you would have been out in Asia. You see? So there's a lot going on there. It's just sort of like, and now you're like, well, what about this? Euro's so strong and CAD is so weak. I don't really care. That's the problem, right? I don't really care, because most likely this is what's going to happen next, but based on technical analysis only, right? And I'll show you that opinion. Remember, it's not my opinion. I'll show you the math. You ready? Here's the math. The math says it's likely to continue down in the future. And you could scope it out like this if you wanted. Okay? And so the thought process here is that. Okay? Not an opinion. That's currently what's in play. So that's, so I always get I scratch my head when when I see people reacting to this, and they're like, "Oh my God, look at it!" Oh, like, I'm more interested in the trend. Okay, so I'm already thinking Monday on this. You see? Making the sense? Yeah. It's time I disappeared. Yeah. Yeah, well, if you do it that way, Peter, it definitely doesn't make sense, right? But so whatever. So that's why I say, well, I want you to look at these bigger trends versus what's just happening in the moment. And on top of that, if you were trying to explain this trend, what you're saying is based on macroeconomics and the flow of money globally across borders, CAD will be stronger than Euro, although Euro won't be weak. So based on this, you might make money on a Eurocad trend, but you would make more money based on the same macroeconomic analysis trading something else like Euro dollar long and CAD USD CAD short, right? Or something to that effect. So right now, all this is telling you is, you might not get that today, so you can scalp your way off that, but, there's probably something better to be doing. That's all. You can make money on that, but let's say you make 50 pips on this, something else might have paid 80 pips, and it's exactly the same logic, exactly the same risk, and you're happy with your 50 pips, but you could have made 80 or 100 on something else just because it moved better, because the macroeconomics, or let's say the relative strength, made more sense somewhere else. But hey, 50 pips in your pocket, 50 pips in your pocket, to each his own. Okay. All right, so there's Euro across the board. I actually want Euro strength. You have to understand that. Okay. So that's going to impact the way I look at this. Okay. I see that. I see this. And now on the smallest time frame, I see that. But what was the plan weeks ago? Or not weeks ago, days ago. What was the plan days ago? I would like to buy this around 125 and have it go to 130. How many people agree with that? That would have been the plan days ago. Days ago. A solid week ago. And yesterday things were collapsing and I'm like, the sky's falling, the sky's falling. Right? I noticed a couple of comments. People really appreciated that I wasn't in freak out mode. And so here we are now. And well, there you go. Hopefully that's it. So now on a smaller time frame, so now let me go even smaller. Let's go 15 minutes. And now I might measure it this way. Okay. So if you consider this high higher than this high, then the next setup might be somewhere in here. Okay. I know, lots of lines, right? Well, you need to pay attention so you know which ones matter the most. So now, so now looking at this, you can see there's an overlap of this key pivot also being a 382, and then this key pivot also being the 123. The 123 is a 618, so I'm trying to combine that into a cluster. So now I can get rid of this, if it'll let me select it, delete. Now I can get rid of this, select it, delete. Now I can get rid of this, select it, delete. Now I can get rid of that, select it, delete. Okay. Now I wait. What am I waiting for? Well, if I'm a bull, what I'm waiting for is this. Okay? This is something we did Thursday. So we actually did this exactly 1 week ago. It's just how it works, pundit. It's the flow of money. The flow of money is my criterion. It has to do with leverage. Okay? Okay? There's also a level of security with those funding currencies that make people want to leverage it. So, for example, the United States, largest, most mature economy in the world. Check. Japan used to be the second largest and most mature economy in the world. Probably the second most mature economy in the world, but it's no longer the largest. But you have to understand, in the 1980s, the Emperor's Palace in the middle of Tokyo, I think it's 1 square kilometer or something. I think it's even less than that. That little piece of land in the 1980s was worth more than all of California. Did you guys know that? The palace in the center of Tokyo was worth more than California. Okay? So that is it's just part of its legacy. It's still a funding currency. Okay? Check. Swiss franc. Well, it used to be where wealthy people would stuff their money into Swiss bank accounts. But the other thing about it, right? So think about it. Think about it that way. If Switzerland is still a place for billionaires to store their money, when things are bad and billionaires are not deploying capital but preserving capital, they stuff their money into a Swiss bank account. That's when things are bad. But when things are good, they're spending it or they're investing the money, which means they have to take it out of the Swiss bank account and put it somewhere else. So when things are good, money flows away from Switzerland. When things are bad, money flows to Switzerland. It's not my rule. Okay? It's just that is that. Okay? So there's another component, and I forget the percentage now, but I believe, at least at some point in history, and I think it still is, there's a certain percentage of silver required by law backing up Swiss franc. So to say it differently, if the Swiss National Bank is going to print, I know they don't print, but this is what the media says. Well, let's say produce. If the Swiss National Bank decides to produce more Swiss franc, they have to buy silver first. That's right. Brad says still 30 or 40. Now, Brad, did you get that from research or did you get that from me? Because I always say that, but I haven't looked it up in a long time, to be honest. So if you looked it up recently, then that'll just reconfirm, and then I'm cool with that. Okay? So anyways, therefore, it's not truly a pure fiat currency. Okay? Ciao. Okay, good. Thank you, Brad. I appreciate that. Good work, by the way. That's the way to do it. You're like, okay, Wayne said something. I'm going to go check it out. Awesome. Hey, did you take the JOB? Best thing about that is you can save capital. Yeah, save it, man. Yeah, I noticed you haven't been around as much, so yeah. What are you doing, the 7? Well, that's the best week. Yeah, the sad thing is they stuff you into teams now, right? They stuff you into teams. You have to work in a team, which really, really sucks. I'm like, I don't need a team. I wanna go solo. I'm a wolf. But anyways. Okay. Yeah, I highly recommend taking classes. Oh, good. Right on, man. Well, remember, the secret to success is saving capital. I'll tell you why people, even in the top 1%, why they're poor. So let's say Brad is an average Joe. I don't think Brad Hall is an average Joe, but let's say he's an average Joe and he's got a couple of decades of experience under his belt, and he's offered a job, and they're like, Brad, we're going to pay you $368,000 a year salary, plus some bonuses and some health benefits, and so on and so forth. Okay, so $368,000. That makes you, in the United States, in the top 1%. Now, you're just barely into the top 1%. Like, you're just scratching, but hey, you're way better off than the top 2%, right? Okay, but you understand? Okay, so you're making $368,000 a year. Your commute is 40 minutes each way, and you go out to lunch a lot and all that kind of stuff. So here's what happens. You go out and buy yourself a nice car, and you spend $1,000 a month on your car, which means you have a $100,000 car, which you pay for over 5 years, 5 or 6 years, and so on and so forth. And you have a nice house, and you're spending $5,000 a month on your house, and so on and so forth, right? You're just kind of going through things, and at the end of the day, you're spending your income. You're just spending your income. So they pay you to go to the office and look busy all day, and you spend it. And you spend it on your country club, and you spend it on your car, and you spend it on your house, and you spend it on your vacation, and you save, and all that kind of stuff, and for retirement. And you're poor. Okay? Businesses are so much better. Now, first of all, you have to always think about GDP, guys. Okay, what does GDP tell us? What's the first 2 letters in the GDP equation? Does anyone remember? C plus I. So, and then the third one is what? G. Okay? And then the import-export is sort of like, it's a filtering process to make sure you got the right number. But let's say there's three entities in the world. You can choose to be a consumer. You can choose to be a business. Or can you choose to be a government? No, you can't choose to be a government. You can't incorporate as a government. I mean, I guess the closest thing to that would be a nonprofit or something, but whatever. Okay, so now you have to choose. The difference between these two, so that, right, is this is a consumer, a person. This is a business. So remember yesterday, I think it was, we changed the letters to say, okay, this is people, Okay? And this is businesses. So you can choose which one you want to be. Do you invest money or do you work for money? Do you spend money or do you invest money? Okay? So if someone offered you $368,000, you're like, oh my God, I'm in the top 1%. But you're a consumer. Okay? You're a consumer. If you're a business, you invest. And this is kind of the, investing, right, is the important part. Because when you invest your money, the money makes money. So then you take the money from your investment that made money, and then you invest that money and it makes money. And then you invest that money and it makes money, and it makes money, and it makes money, and it makes money. There's almost no job in the world. Think about it this way. There's almost no job in the world that would put a zero at the end of this. How do you go from 368,000 to 3.6 million? How do you get above the top 1%? Like, how do you get in the top 0.75%, by the way? That's probably what it's needed just to go from 1 to 0.75. There's almost no jobs. Almost none. However, if you're a small business, you can. The only way to truly do it, I mean, you can argue with me and say, well, if you were the CEO or if you were Mark Zuckerberg, dude. Okay. All right. So how about like when you invest now, you're a business. What happens to businesses, first of all? Businesses pay less taxes. Did you know that? But how about this? Isn't this interesting? You can take, let's say you make $150,000 a year as your business. Okay? Now remember, you're $368,000. That dude has to pay 40% taxes, right? So how about this? If you made $150,000, what you can do as a business, so now your business makes $150,000. Busyness. I don't want to spell it all. Busyness. Okay. You can do things like you can take $50,000 and put it into your retirement account. Give it to Brad, and Brad will stuff it into a retirement account. Okay, which is an investment. It goes in to the stock market, right? So Brad, you give it to Brad, Brad puts it into a mutual fund. Thanks, Brad. Brad's going to ask for 1% of your entire net worth to buy you a mutual fund once. It takes 8 minutes, and he's going to charge you 1% of your net worth every year, year after year after year, even though he only worked 8 minutes. Okay? Thank you, Brad. But what's clever about this? Well, first of all, that's going to compound. But you know what? This $50K before taxes. So before the tax man shows up to your business, which is your house or your home, to you, okay? What can happen is you can take $50,000. That's after your income minus expenses. So now you have basically a taxable income, right? And then you're like, no, wait, tax man. My business is going to set up a retirement account for me. And the business now, right, will take that money and put it into your retirement account and put the $50,000 there before taxes. So then the government comes in and says, all right, what's your taxable income? You're going to say, well, I had all this income, then I had all this expenses, and then I have my retirement account, and what's left over now is $100,000. And now you pay your taxes on your $100,000. And of course, you can then write off your house and all these other things. And your house is an investment, right? So you can't write off your principal, but you can write off your interest because it's an expense. But whatever, right? And so now you lower this and lower this and lower this, and a poor person might be paying 40% a year, and you might be paying 22% a year in taxes, plus you got $50,000 a year growing that you never paid taxes on. Remember, you paid yourself first. It went into the account like you never made it. You never had that money, but then it goes into your account under your name, and it's sitting in an account growing. Like even this year, the stock market's up 10%, guys. We were down 30%. Now it's up 10%. Okay? So if it's growing at 10% a year, you're making free money, and this is all before taxes. Okay? So after 10 years, it's doubled. And I'm not even compounding. I'm just saying if you made 10% a year, so 5,000 this year, 5,000 next year, it'd actually be a lot more. In 7 years, you double your money. But more realistically, let's say 10 years goes by. Okay? Right? 10 years goes by. What's happened? This 50K is worth how much? Let's say 100K. But what about in year 2? 50K again, worth 80K. What about the third year? 50K. Actually, this would be like 90. 50K, this would be 80. 50K, 70, 60. So you got 100, 90. I mean, it's actually way more than this, isn't it? 80, 70, 60, 50. It's way more than this, actually. Let's see if we can do this differently. The first one would be over 100 for sure, but let's say 95, 90, 85, right? 80, 1, 2, 3, 4, 5, 75, 70, 65, 60, 1, 2, 3, 4, 5, 6, 7, 8, 9. And then this would be 50 your first year. Okay, it's not quite right, but you get the idea. How much money is in your retirement account now after 10 years? Anybody doing the math? Rookie says 750, and I bet you with real compounding, this would be a lot closer to $1 million. Okay? Okay? That's just on the account. You're investing. Okay? So if you had apples for apples, if you had $368,000 a year as a job, by the way, how much does an average person save percentage-wise for retirement in their job? Okay? And then how much does the employer match? Okay? Now what if you made $368,000, okay, not as a C. That was supposed to be pink. Not as a C, but as an I. The business will pay less taxes, pay themselves before the tax man, right? have more write-offs, okay? And here's where you want to get. Here's where you want to get. Like, well, first of all, the business will always make more money. So they're not equal. You're always going to make more money as a business. But here's where you want to get. You want to, let's say your basic requirements for living is $10,000 a month. Or wait, that's probably too much, right? Let's say it's 5. You need $5,000 to feed your children and pay your mortgage and pay for health insurance and all that kind of stuff, pay for your car. This is enough, right? $5,000 for you. So you're living on $60,000 a year. If you're a business, what you want to do is get to the point where you own assets, income producing assets that produce $5,000 a month. Which means if you have a business, like it's hard to get a job that pays you significantly more money than you need to live. Do you understand? Like it's very rare, right? You walk in, you're like, yeah, I'm hoping for 60. And they're like, we're going to offer you 360. You're like, no shit, right? It all seems to like average up, right? It all seems to average up. You have a lifestyle based on the value, the perceived value that, whatever. You find your place in society or whatever. So if you are thinking like a business now and you're using your Forex, by the way, Forex trading is a business. It's fantastic and the tax treatment is amazing in America. It's really good. But if you were able to incorporate to be a trading business, right, you get all these benefits. But what you want to do, and let's say you're using your trading account to do this as well, is you want to find a way to make your 5K but save every penny. You do not want to make yourself wealthy per se. Okay, that's no big deal. You don't want to make yourself wealthy by spending your money. The key to wealth is poverty. Okay? Okay? The secret to wealth is poverty. Okay? Meaning you need to starve yourself. You need to defer your pleasure. See, a child, right? A child, you say, look, I'll give you this ice cream right here, right now. I'll give you this ice cream. Or tomorrow and the next day and the next day. 3 days in a row, I'll buy you ice cream if you say no to this one in front of you right now. So you can choose this one ice cream cone right now, or you say no to the ice cream today, but you can have one tomorrow, the next day, and the next day. They always take the one right in front of them. Okay? Always. So if you have a more mature mind, right? No, by the way, that's why there's a time value to money. There's a time value to ice cream too. Okay? But if you can defer your pleasure, what happens is, because consumers, they just buy stuff. I got money, I buy stuff, now I'm happy. Right? A business thinks long term. And so what you need to do is, right, out of your trading account, like I said, save. Maybe it's that 50K, okay? Instead of a retirement account, you put it in an investment account. So now you have your Forex account and you take your money out. And so in that case, you'll have to pay some taxes, but then you put it in here and you can trade, okay? Or invest. And at some point, like let's say real estate, you're able to, let's say you're saving some money every month, and after a year or two, you have enough to put down a down payment. In real estate, and remember, banks are awesome. Let's say they'll give you 75%. If it's an apartment building, they'll give you 75% of the money Oh my God. And all they want is like 5%, even less than that. Okay. All they want is 5% a year, and you can keep everything else. Okay. And you only have 20% skin in the game, so your return on equity is really high. And then you count on the dual forces of amortization, right? And paying down the principal. Well, amortization, sorry. And the other one is asset appreciation. So the renters pay down the 75%, and over time, right, the value of the property goes up. So there's two forces. Okay, it increases your profitability, lowers your return on equity, but I don't really care about ROE. Okay, but what happens is pretty soon, whether it's this investment or the next investment too, or maybe even the first investment, the second investment, and third investment, but let's say after 10 years of paying yourself your minimal acceptable performance, your nut that you need to live on, you've been living on 60K now for 10 years, but over the 10 years, you've taken money out of your Forex account and put it into two or three real estate deals. And at the end of 10 years, your real estate, your assets are paying you the $60,000 in cash. The $5,000 a month you need is not even, it's not coming from your Forex account. It's not, right? It's coming from your assets. Plus, over 10 years, the value of these assets have gone up 50 to 100%. Certainly 30%, I would expect. Okay? You understand this? So now you've deferred your pleasure for 10 years. You're like, man, I'm making all this money in Forex, but I keep drawing down my Forex account to buy real estate. Not C. You take your business account, Forex, and you're creating, right? You have all these retained earnings. So you're taking retained earnings because you're making enough out of Forex, but you should diversify. So then you take that and you invest in, now you have Forex and a real estate in portfolio. And then all of a sudden, after 10 years, you have this paper wealth. The value of your property went up. So unless you refi, you can't access that capital. But you know what? That actually is the secret of commercial real estate investing, is you do extract the capital and increase your ROE. But even without that, let's say you have now this asset appreciation, so your net worth has gone up. You're making $5,000 a month, whether you trade or not. And now here's the cool thing. Now you're like, well, okay, so now I'm rich. Well, no, now you can trade another 10 years in your Forex account and not spend any Forex money. Do you see that point now? Because your Forex should be way better than real estate. Real estate's only producing 15% a year. You're doing 3% a month compounding. Way better than real estate. But the thing is, real estate does all the work day and night. You don't have to do anything. You still have to work as a Forex trader. You still have to pay attention. You still have to show up and do the job. You see what I mean? So now you have that. So now your assets, right, are paying your normal living life, which you had probably the previous 10 years. So now this 10 years, right, and the next 10 years is all taken care of. But here's the other cool thing. With commercial real estate, it's pretty easy. Every 5 years, right, even though you have a mortgage amortized 30 years, every 5 years, you have to start over again. So now, let's say 10 years goes by. Let's say you have a certain relationship with your bank. So we'll just say it's 10 years. So 10 years has gone by. The value of the asset has gone up 30%. But what have the renters been doing this whole time? Amortizing your principal. So they've drawn it down 30%. You have 60% equity. So now you refi and you extract that capital, and now you might be sitting on hundreds of thousands in cash. Now you should probably reinvest into your property, keep your incomes high and all that kind of stuff. But you're still going to have big chunk, okay, of cash. So what do you do with that? Remember, that's free money. Basically, the renters gave it to you. Okay? Now you have this in 1 year and you haven't done anything. And that pays for the car. That pays for the house. That pays for the vacations. Plus, your Forex account is growing exponentially. You don't do anything, nothing. You don't do anything to earn your 5K. And of course, over time, this will go up because why? That big chunk of change, instead of spending it on TVs and cars, what do you do with that? Buy another real estate property. Now you're making 8K a month, plus you never touch your Forex account, and you're growing your Forex account into the 3.6M, plus your portfolio of real estate's going to go up 3.6M. And by the time you're ready to retire, right, you're probably earning 25 grand a month on all your real estate property, and you have a total net worth of 10M, and you would never make that in a day job. Ever. Plus, it gets better. You still got your Forex. This is just from the income from your asset portfolio, your I. And this is your wonderful Forex account, which has also gone up. I don't think you can get a job and start thinking like by the time you're going to retire, you're going to have 10 or 20 M in your bank account. But a business can. Okay? If you can get to the top 1%, you should get to the top 0.5%. Most people struggle just to even get to the top 1%. Okay? And the best way to do it is I. Never spend anything. Never. How much does your TV pay you? F you, TV. How much money does your car make? F you, car. Okay? Do you have a big house? You should have a modest house because your house doesn't make you any money. How much money does your house make? Well, you're like, well, it goes up 5% a year. Yeah, F you. F you, house. Because the stock market goes up 20% a year. How, right? You should live in a tiny house. You should live in a cabin and have all your money in the stock market, right? All your money in your Forex account. Okay? You're doubling your Forex account every year and your house goes up 5%. F you, house. Okay? Okay? The worst thing is to like have a good trading year and then go out and buy a fancy watch. Okay? You need deprive yourself of pleasure on the short term. Okay? You can do the math, and I've done the math. The less you pay yourself, the more money you will make. Okay? So I want you to think at some point, are you investing your money or are you spending your money? Are you a C or are you an I? Where do you fit in life? Because you ain't no G. What about traveling? Yeah, but that's just out of your 5K a month or whatever. Okay? What I'm saying, like, put it this way on, let's say you, like I said, you need 5K a month, but what if you made $22,000 trading Forex this month? A poor person would take this and go spend. I'm going to buy a big TV. I'm going to lease a fancy car. I'm going to get myself a nice watch. I'm going to buy some clothes. I'm going to go to the club, models and bottles. Okay? What I'm saying is, no. Okay? Right? What I'm saying is, of that 15 to 17,000 gets invested and you live off the 5. Now your 5 would be things like housing, and meds, right? Food, travel. Okay. Now your number, like I first did, is 10, but I don't know, right? For some, it's 25, right? But whatever your number is, okay. So like, if you live off 25,000, and then I'm like, well, how much money do you have in your trading account? Like, I have $8,000 in my trading account. All right, you're not a serious Forex trader, right? If you're a professional business, you've invested in your business, right? So if you make $25,000 a month, or you live on $25,000 a month, you probably have a bigger account, and from there you'll grow that and whatever. So what I'm saying is, you look at this as a business and you're like, I'm not a consumer, I'm an investor, because you will, okay, let me make this point as well. You will have all those wonderful toys. All those wonderful toys that the consumer spends $15,000 a month on, you will get for free. Do you know why rich people are rich? Because they get all their wonderful toys for free. Poor people exchange their time for a pittance of money, and then they go spend it on stuff like rent, like TVs, like phones, like clothes. And what happens to that? Well, rich people own the apartment building. They own Samsung shares. They own Gap shares. And it goes to the rich people. And they take that free money and they're like, now I got a Rolex. But you know who bought the Rolex? The renters. No, hey, rookie, a poor person can step up at any time. Now, it'll take effort. Yeah, you probably need some education and all that kind of stuff. But it can be done. ISM services. Oh, 57. Cool, right on. Okay, in America, you can do it. Okay, I don't know about other countries, but in America, you can step up at any time. Okay, but the object, though, that we're talking about is, you must choose. Okay? Pleasure now, pleasure in the future. And even when you say you could have 25, let me try to do this differently. Okay, you can have 25 times more pleasure, but you'll have to wait 10 years. Or even 250x, but you'll have to wait 15 years. Or you can have now. Okay? And most people, they can't do that. Okay? So most people, they underestimate what they can, they overestimate what they can do now. Another way of thinking of it is they think they deserve lots of pleasure. And you can define that any way you want. Maybe it's lots of money. I'm good enough, I'm smart enough, and gosh darn it, people love me. So I deserve a certain lifestyle. Just like the people on TV, I should be just like that. And I'm just as smart, and I'm just as good looking, and I'm just as talented, and I'm just as them, so I can live their lifestyle, and I can have it now. Okay? And you spend your money on that. That's a consumption play. Okay? The difference is actually having the value behind it. And the value, remember, like as a trader, there's a value exchange. Okay? There's a value exchange. So if you produce value, right, people give you value back. And so that's where you have to look at it as a business. Instead of trading your time, okay? right? Instead of trading your time for money so you can go out and I don't know, do whatever regular people do to be happy. Okay? You have to say, I don't sell my time. Okay? I don't sell my time. I create, and the big part here is create. Create value. I create value. It's not what did you do today. What did you create today? Okay, if you're a doctor, you saw 47 patients today. You worked a 10-hour day. Great. Poor. Okay? So anyways, you need to be focused on value creation, I think. And then from that, building more value for yourself. This is what I does. Investment creates value, right? So anyways, I don't know how we got on the subject. But short-term versus long-term, I think, changes a lot of things. The way that you look at the market. Because the way you look at the market is based on your thought process. Okay? You expect to get rich quick. And I'm saying you can totally get rich, but more realistically, you can get rich slow. Is that okay with you? And you're like, no. Okay? Now, the interesting thing is, what I was trying to say is, if you can focus on the I, you could have 250 times more pleasure if you defer. Like, I don't know how much pleasure your TV brings you. You know what I mean? Or whatever, or your car lease or whatever. I don't know how much pleasure that will bring to you. But if you can defer by being an investor and not a consumer, 250x, like, it's hard for you to even imagine, like, in 15 years, you can have more pleasure than you can even imagine. And you're like, well, I can't imagine that. I know. But it will take 15 years. I can't think, right? Because, again, we think we can do more now on the short run, but we underestimate what can be done over time. We don't have a good ability to perceive that. I mean, look, most people can't walk into a house and imagine, like, the changes that can be done. Most people walk into a house and the wife says, I don't like the color of the walls. You don't like the color of the walls? You paint them. What does that have to do with the house? I don't like the layout. Knock down the wall. Expand the kitchen out. Oh, I can't see that. I can't see that. I can't see that. Right? But there are others which, at least this can compound, and the longer you can let it compound, the better you are. So what does it mean 250 times? A lot of pleasure. It's a lot. It's more than you can imagine. So you need to move from being a consumer to being an investor. And it's a mindset and some sacrifice, right? But years and years and years ago, my accounting firm told me, they said, Wayne, there's 2 accounting systems. There are 2 taxation systems in America. One for poor people and one for businesses. And that always stuck with me. It is, right, a crime. They don't teach this in school. So imagine now, we do the same thing. Let's say we make the same amount of money. This person pays 40% in taxes, and I pay 20% in taxes. Okay? But the money that I didn't pay in taxes is now compounding exponentially. Okay? Even though we make the same amount of money, this person pays 40% to the tax man. I pay 20% to the tax man, but the other 20%, so let's say 50,000, is compounding on an average of 8%, but probably closer to 10 or 12, right? Year after year after year. So again, I'm either paying that 50,000 to the government so they can build schools in Baghdad, not Boston, Baghdad, or I take my money and I invest it into the stock market. And then another 50 the next year, and another 50. This person's paying the money. I can't spend the 50K. They can't spend the 50K because they paid 100K in taxes. So at least I get to keep 50K and not pay taxes. And I give it to me. I pay myself first. So I have my income minus my expenses, pay me tax-free into an account that will compound over time, and whatever's left over taxes. The other guy just pays it all in taxes. So think about that. Just the 50K. Every 10 years is $1 million. Do that for 20 years, which is a short career, depending on how old you are. If you got 30 years, dude, it's compounding. Because remember, the first one after 10 years will actually double again. Actually, it'll more than double. But so let's say at the end of 20 years, you'll have $3 million that you never paid taxes. You would have just paid that in taxes. Do you understand? Like, just the $3 million came from you being in a business and not a consumer. It has nothing to do with whether you buy real estate. It has nothing to do with all these other things you could do with your money. Just the fact you're a business. After 20 years, you have $3 million sitting there that you can live on. Only in America. Get your Botox to America then, right? Or wherever you live, you probably have a lot lower standards of living. And, you know, like, so speaking about Boston, we had a fireman. Was he in Boston? No, he was a New Yorker. No, years and years and years ago, we had, he was a fireman in New York City, New York State, New York City. Anyways, he became a Forex trader. And his marriage fell apart for various reasons. And he's like, you know what? He's about retirement. I think he was in his mid-50s or something. He's like, okay, my kids are in school or moved out, right? My marriage has fallen apart. I make money as Forex trader now, not as a fireman. And you know what he did? He moved to Thailand, a tiny little beach town in Thailand where there's no tourists. He just, like, his cost of living was nothing. And he's like, Wayne, the awesome thing about it is I'm in this tiny little town in the middle of nowhere, Thailand. And if I need to go to the hospital, it's nicer than the one in America. And it's like, it's dirt cheap. You just walk in, they're like, oh, okay, we'll cure your cancer. It's going to be 1,000 baht. You're like, 1,000 baht? Boom. Right? In America, they're like, you got cancer. Boom. You're bankrupt. Right? So anyways, he's just like, so he moved to Thailand. He's like, my rent is nothing. My food is nothing. My health care is nothing, but it's better than I got in America. And I'm like living the lifestyle I always wanted. And I'm a currency trader. I pay all this, right? You know? So anyways, it's just really funny. Real story. Yeah, boom, bankrupt. Yeah, for sure. Yeah, he was living the dream. I know someone else too that he was, I think, still learning Forex, and he was a young man. I forget the background, but anyways, he said, Wayne, what do I need to do to really become a full-time Forex trader? And I'm like, well, you need to be able to focus, and the best thing is to keep your expenses low because you want to live like a pauper and become a king. You don't want to live like a king because you'll never get there. So I said, like, you got to lower your expenses. And I'm like, you're a young guy. All you need is an apartment and a mattress on the floor, an awesome internet connection, right? And a computer. I'm like, you should just like wake up in the morning, trade, right? And so he did, but he moved to a tiny town in Brazil. And he's like, I live on $500 a month or something. He's like, I got a nice apartment. I'm in a tiny town in Brazil. He's like, well, the life's good. The food's good. I'm out in the jungle. He's like, it's really cool. And it cost me like nothing to live. And he's like, I got a mattress. I got a laptop. I got internet. And I'm going to do this, right? So anyway, so like true stories, what you want to do, if you can, is lower your 5 to 4, right? Or live on that 5K or whatever your nut is, right? You want to stay small, stay humble. I say it every day. Maybe you don't quite get what I mean. This is what I mean. If you're making $25,000 a month, pay yourself 5 and leave 20 in the kitty, in your trading account. And then the next month you make $28,000. Pay yourself 5, keep the rest in the account. And the next month you make $30,000. Pay yourself 5, put the rest in your account. And what you'll see, and you won't get this. Like you won't get this. Like the math shows, like you after 10 years you'll have $500 million. Okay. Or what you can do is when you get your account size large enough, you can take some out. Don't take too much, but take some out. And like I said, a banker will come in and put up the vast majority of money and be a silent partner in your real estate portfolio. Like it's crazy how awesome that is. Okay? Right? It's crazy. So grow your trading account maybe to $1 million. I guess I have to do it this way now. I'm committed. Okay? Take 200K out and put that into real estate. That's worth $1 million. You see what I mean? I'm not doing this right, but okay. You see what I mean? So you take 200K out and buy $1 million worth of real estate. So now you only have this, but then you grow it again. So now you got 1.6 or 1.5 or 1.4. Let's say you grow it to 1.5. Take some more money out, buy some more real estate. Okay? Like keep it floating. Like take 500K. And that gets you a lot of real estate, right? And then you grow this again. Now you got your 1M. You grow it to 1.8M. Take 8 out, buy more real estate. And just keep your account floating around $1 million. Now, it might take you a while to get to $1 million. Yes. But if you don't have a plan, you're never, right? So what you do is you keep floating around $1 million. Okay? And to put that in perspective, like Brad Hall at his job, managing wealthy people's money, he probably has a minimum of $1 million, maybe $2 million. Like $1 million in America is not a lot of money. You certainly can't retire on it. So it's just $1 million, but you keep creating this $1 million, taking some money out, doing a lot of You're consuming a little bit to live, but and all of a sudden, over 15 years, you got this amazing portfolio of real estate. Your major investors asking for 5% a year. A year. You're like, oh my God, you're giving this money? And then who's paying the mortgage? All the renters. You're like, oh, you don't do anything? You don't pay for anything? The banks are putting up 75 to 80%. And you're like, this is just a way to store your value. It's another form of money, right? Or, of course, you can go with the math. You have 1 million, then you double it, and then you have 2 million, then you double it, and you have 4 million, and you double it. And what'll happen is psychology kicks in there, right? So what if you'd made $1 million a year? It sounds like a lot, right? But you're making 500 to $1 million a year in Forex. You always have $1 million in your account, and you own 8 million, 10 million, 20 million in real estate, okay? Your net worth keeps going up. Your income keeps going up. And at that point, that's where you're like, your pleasure is at 250K or 250 times because your Lamborghini is free. Your Rolex is free. Your vacations are free. Okay? Well, Austin, it's all compounding. I don't know what your number is. Or so if you only got 5,000 and right? Total, you're not going to make $5,000 a month. But what you need to do is do the math. And here's the thing. And I think this has to do with how we're taught in school. And maybe even, I always get in trouble when I say things like poor and poverty and stuff. But if you don't know, okay, if you don't know money, it's hard to conceive that you only got $5,000 now, but in 20 years you can have $1 million. And you're like, I don't get it, Wayne. I only got $5,000. How could I have $1 million in 20 years? And that's what I mean. You expect too much in the short term. You meaning everybody. Okay? We expect way too much on the short term. But we have no concept of what can be done over the long term. Now, if you see the self-made billionaires, they're all long-term people. No one's walked into a casino, dropped $5,000 on a bet, and come out with $1 billion, right? You look at all the billionaires, every single one of them, they all had a long game. Okay? The front end, right, is the distraction, meaning the front end. You're trying to get from, you want to grow your account from 5 to 25, and you're going to do it in the next couple of months, right? The front end of the curve cuts out time, cuts out compounding interest. Yet Einstein said compounding interest is the most powerful force in the universe. Okay? Austin says most people make less than $5,000 a month in the Caribbean. Most people in the world make less than $5,000 a month. Almost nobody in the world makes $5,000 a month. Amazing. But you can change that. What I'm saying is you can change that. Yeah, rookies like most people are poor, right? So what are you going to do about your own poverty, whether you're making $368,000 a year or you're making $36,000 a year or you're making $3,600 a year? What are you going to do? The most important thing is you find a way to create value. Instead of exchanging your time, okay, you exchange value. And then you are focused on not C, but instead I. Because if you exchange value to someone else, they will give you money. And then you invest the money, which is another value creation proposition. Your I creates value, you create value, you exchange the value for money. So this is like trading other people's money as a Forex trader. They give you money and you invest it. You don't buy a watch, you don't buy a yellow Lamborghini. That's still the poverty mind. And usually that just comes from lack of education. You should say, well, I can take this $100,000 and make $5,000 a year. Cool. Well, $1 million would make you $50,000 a year. Or maybe those numbers are off. You take $100,000, okay, and it makes $10,000 a year. So now if you can do that 10 times, you make $100,000 a year, which is a lot more than your $5,000 a month, okay? But it will take time. But if you're focused on creating the value and then not spending it, see, if you spend the value right? You created value for somebody. Let's change this process. You're a Forex trader and you trade other people's money. So you create value by growing their account for them, right? And they pay you money and you spend a watch. You buy a watch. Then you trade their accounts, you make the money again, and then they give you, you take your cut of the profits and you buy a nice car. And you just stay here, and then you get sick. And what happens? You don't create value, and all you have is your car that's depreciated 80% in 3 years, and your watch that nobody cares about. Okay? And it's all gone. You spent it. Right? You are a consumer. The interesting thing about investing is when you're dead, you died. Your value creation stopped. Your money will still work. Your money lives on. Your children, your grandchildren are taken care of. With or without you. With or without you. Oh. Yeah. So that's what you need to focus on, I think. Right? So now you're like, okay, I need to create value somehow. It'll help you get out of your poverty. It will help your children get out of poverty. It'll help your grandchildren. And by poverty, you might make $300,000 a year, but you still exchange your time for money. Okay? So you might say, I'm a currency trader and I can make 50% a year with low risk. It's absurd that you can do 2.5% a month. Most people would laugh. I know you can, but it's absurd to even think of it to a potential investor. Potential investors are like 15 to 20, 20 to 30, but 50 to 100 is insanity. But we know you can do it. I know you can do it because it has to do with the leverage that Forex offers. So anyways, you produce this value, 50%, right? This is the value you offer. So if you got no money, you got no car, you got no woman, and there you are, you need to focus over the next 5 years obtaining a track record of trading Forex in such a way that it shows that over the long periods of time, you can create consistent income through changing markets. That's what the next 5 years of your life is going to be. That you can prove to someone beyond a shadow of a doubt through changing market conditions and crisis number 1 and crisis number 2 and crisis number 3 and election and re-election and contested election and whatever, disasters and disease and hurricanes, through all of it, you can produce 2% a month. You're like a machine. That's what the next 5 years. Wayne, I got to get rich quicker than that. Well, that's why you're going to stay poor. But if you can produce this value, now you're in value creation mode. If now you're doing that for other people. So now you have this value called your Forex trading. Okay? And then they pay you money to do it. You pay yourself, but then you invest the rest. And then you continue creating value. They keep paying you money. You keep investing more value. Okay? And this lives on and on and on and on and on. Because the interesting thing is the value you create, you only get 20%, right? How much of your investment do you get to keep? 100. You're your best client. You are your very, very best client. Okay? because you pay yourself 100%. Okay? You create more value, you get paid more money, you defer your pleasure by investing most, and what happens over time? You may never need to, you get to this point where you don't actually need to provide the value anymore. Because you're like, dude, I doubled your account and you only paid me 20%. But I doubled my account and I got more money than I can imagine. So this breaks down. You don't need clients anymore. In fact, you don't need anything anymore. This investment now pays more money than you ever dreamt possible. And you don't have to do anything. You don't have to get out of bed. You are done. The money thing, this money thing is done. And when you're dead, it's still there and it's still making money. It's still making money, and you have to understand, this keeps going up. It makes more money and more money and more money, and it keeps going up, and you're not doing anything. And you might be dead. It might be 100 years from now, and it's so much money. It's crazy. Okay? Kishkor says, hey, is that a return on invested capital? Nobody cares about IRR. IRR is for people that are trying to hide their real. Okay, like, for example, why do venture capitalists use IRR? Oh, our internal rate of return is, 30%. Yeah, well, what about all that other money you lost? Oh, well, or how about all that money I gave you that you're not investing? Oh, well, we don't count that. We don't count that. We don't count that. In Forex, you count everything. It's an absolute return. Okay? So how much did your money grow? Minus, right? So grow. How much more money do you have now than before after expenses? Okay, after your, okay. So typically it's a 220, right? So they're like, how much did the account grow after the 220 is accounted for? Absolute return. And you can't say things like, well, it was a down year, so no one cares. How much money did you make in an up market? How much money did you make in a down market? Okay. And all this idea of, like, I've seen this a lot, by the way. A Forex trader, the non-professional Forex trader says, they're making 122% a year. Okay? And they'll show you the winners. And you're like, oh, wow. Now show me your open positions. And they're down 22,000 pips. And they're like, well, they're still open. We're not counting them. So that's a form of doing like an internal rate of return. Like, oh, well, we're still in those investments. We still believe they're going to pay off. But right now on all the ones we've closed, we're up 122%. But if they exited right now, they would be negative. They'd be negative 30%. But they can't get out of that because then they'd be negative and that'd be the end of their career. So they're like, oh, we're up 122%. Well, what about these 22,000 pips you're losing? Oh, well, we don't count those. We're still in the trades. No, I've seen people lose 22,000 pips. It's amazing. You're like, you're joking me. Like, what you're doing is straight up fraud. But, okay, they're not, all right? So anyways, they're not professionals. Well, see, Reb, so let's talk about Reb's. He says right now he's definitely doing 2% a month, and I don't feel like I need anyone else's money. There is a very, 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 very good reason for it. Okay, Reb? So hear me out. if you can trade other people's money, so opium, if you can be an opium trader, and let's go back to the previous example. Okay, Reb, you need $5,000 a month to live your normal basic life. Okay? And one of the things that you need to do is find or raise enough capital that the fees you're charging are covering your $5,000. So now that you can take your actual Forex account and grow that, so you have your FX, then funds your investing. Okay? And then I think I got this out of order, but I think you know what I mean, right? So then you trade other people's money. They pay your basic living expenses. You trade your Forex account, which grows. So then your Forex account finances your investing. You're investing. Now you're taking all of this investment capital and you're funneling it. So I need to put it over here, right? So Forex funnels pays for your investing, which goes over here. And this goes over here. And then now you might take the investing. I guess there's a circular loop here. This pays for your nut. And what happens is your investing can then go to here, which pays for this, which goes to here, and so on and so forth. And you will really, right? You will really, 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 really speed up the wealth creation process for yourself. Okay? This is a lot like the fund that I'm starting. Right? It's a lot like the fund that I'm starting. The idea is, if you work for me, I'm not going to make you filthy stinking rich. You have a job. You're doing something and you're getting paid, and no job makes you rich. Okay? You're providing a service and you're getting compensated for it, but it ain't going to make you rich. But you will make yourself rich. Your money will make you wealthy. Okay? And the process of having a job, even if you're working for me as a portfolio manager, what I'm doing is I'm helping you do this process. Okay? I help you cover your basics so that you can let your Forex account grow. And then it'll get too big, and then you'll buy some real estate, but you'll still have tons of money in your Forex account. And you'll grow. And then you'll take some money out and put it in your Forex account. And I might buy you another 10 years where you could even grow this to 15,000 because you're taking some out to pay yourself, plus your clients are paying you money. So now you're like doubling and tripling your old lifestyle, but still the vast majority of your money you're throwing in back into yourself, which then allows you to buy more investment, which then grows outside of yourself. And then you grow your Forex again, which gives you more investment, which allows this. And all of a sudden, you're living way better than you used to. Your net worth has gone up 10x, right? To do a Grant Cardone thing, right? Your net worth goes up 10x because now you've been living off client money. You're growing your trading account. You're taking that out. You're investing into something. Your assets are growing. Income from the assets grow, which then gets too much because now you're at 15. This is better, more than enough. And your account keeps growing. All of a sudden, it's out of control. You're making so much. So at that point, but you see, like having the ability to have 5 or 10 years of living off other people's money allows you to grow your account, fund your investments, which then grows your income, which then allows you to grow your Forex, which allows you to grow your investments, which allow you to grow your income, and more and more and more. And then this is going crazy. But what you should be worried about is not the income, it's your net worth. Okay? And other people's money will help you get there. And then you'll start your own family office or all that kind of stuff. But you'll get to a point where you'll probably just choose not to work. You'll just like, I love Forex and I like trading it, but you'll probably move to like being a swing trader and a position trader. But like, how much money do you need to make a month on real estate, for example? You used to make 5, but now you're making 25. Is that enough? Is it 50K a month? Like at some point, enough is enough is enough. You'll do enough where you're like, you just don't really, you're just done. Whatever your number is, we all have a number. You just kind of get done. You're like, you own, right? You either have your Forex account or you have a stock account, or I pull up real estate because it's pretty easily, discussed, right? Right? But that's the mindset that, especially you younger guys, right? If you got 30 years ahead of you, the faster, right, the least amount you pay yourself, the more you'll make on the long run. Only, and listen to me carefully, only if you create value. If you suck value out of other things, you will not get to where you think you deserve to be. Okay? You need to be an independent value creator. People must say, wow, you can do that for me? And you say, yes, ma'am, I can. I can prove it. Give me a chance. And if you create value for people, you will have clients lined up around the block. And then you can choose, do you destroy the value by spending it on TVs and watches and phones and fancy cars? Do you destroy value or do you create value? So if you take it to the next step and you choose to invest the money that you're making from the value creation exchange, you provide people right, with value, they give you money and you're like, money? I don't want money. Right? Money is an illusion. I don't want more money. I want, right? So you want more I. You put the money somewhere that makes more money. Now if you want your Lambo, it's nothing. It's silly. Okay? So Ministry says, JK Ministry says, well, how about those? So it's all math. So bust out a spreadsheet, guys, and you start with your assets under management. Okay? So you start at year 0 and you put in your $1,000. And year 1, year 2, year 3, year 4, year 5, year 6, year 7. Okay? And your expected monthly return. Okay? So I would actually do this monthly over this period of time, but whatever. But you can do quick calculations or whatever you want. But so at the end of 1 year, 1,000, or at the end of 1 year, let's say you have 2,000. Okay? Let me do this in a different color. So at year 1, you have 1,000. So at year 2, you have 2,000. At year 2, you have 4,000. At year 3, you have 8,000, right? At year 4, you have 16,000, and that's a 4. And at year 5, you have 32,000, 64, 128, okay? 256, 512, 1024, okay? It's easy math, okay? That's how you do it. So how do you double your money? Right? 6% a month. You're like, Wayne, I can't do 6% a month. Okay, great. What can you do? 3%? 4%? 2%? You have to figure that out. But remember, it's compounded. So if it's 6%, right? Assets under management, it's just a variable. What is your AUM on year 0? At the end of 1 year, if you're growing it at compounding at 6%, it's roughly double. So it'll produce 40, 48, right? And you just keep doing it. This is 5, 6, 7, 8, 9, 10. Okay? Okay? So in 10 years, you'll have $2 million. Is that right? 2,004, 32,000, 64,000, 128,000, 256,000. Wait, no, this isn't right. Sorry, this is 5,000, 512,000. It's supposed to be this, 5012, sorry. 512,000. This is 1024, so $1 million. And this was 256. Okay, there you go. Yeah, so at the end of 10 years, you have 2 million. But you have to do 6% a month in all market conditions every single month without fail. But it's just math. So you're like, is that conceivable? You're like, well, 6%, is it realistic? What is realistic? Is it 2%? Is it 4%? Is it 8%? Just do the math. So JK Ministries says, how much do I pay myself? So I've done all that. That's all in my book, right? But you should bust out. So I give an example where I went on my business planning retreat with myself. I was at the Ritz-Carlton in Half Moon Bay, California. I rented it out for multiple days, maybe even a week. And I had a board meeting. I had an agenda, but my board meeting, I had people attend over the phone. I kept meeting minutes, like super, super, super formal. I took myself through mission statements, operational direction statements, vision statements, creating actual business plans and stuff. And then I found the real learning process is when I got into doing the math. So I busted out an Excel spreadsheet and I'm like, okay, I need to create a 5-year pro forma cash flow statement. And I need to do it monthly. Okay, so how much AUM? What's my average return? Okay, I actually did it by pips, and then you start doing based on leverage and all this kind of stuff. And then what I realized is my model was too simple. I had to have variable leverage, which is variable lot size relative to account size. So I understood in the beginning my account size relative to my lot size relative to my account size is going to be a little bit high. But as I grew my trading account, the rate in which I grew the lot size was smaller. So if I doubled my account, let's say my lot size only increased by 50%. Okay? So I played around with all these numbers and was able to think 5, 10, 15 years in advance. And the interesting thing, and I talk about it too in the book a lot, like it's so liberating because now I knew if I just did my pathetic little boring day trading, intraday trading, whatever, my simple little day, very, very achievable day. I knew if I just did that every day, right? Like it wasn't pressure. Like I didn't have to make 100 pips a day. If I just did my simple, basic little foreign exchange job, I knew in 10 years I had more than enough money to be satisfied. You understand that? So suddenly it liberated me. I didn't need to make a lot of pips today. I wasn't forced to make a lot of trades today because I knew the power of compound interest. I actually defined it. And I knew over time, because my lot size was growing slower than my account size, okay, that over time I actually had less risk. So then going back to the JK Ministries, like what percentage do I pay myself? Well, I had to go through the process. In fact, it's not even how much, it's when do you pay yourself? Do you pay yourself monthly? Do you pay yourself quarterly? Do you pay yourself at the end of the year? Do you pay yourself a little bit per month and then a big bonus at the end of the year, like if you worked at a hedge fund? I played around with various models. Okay, do you understand that? The fact that you would do this, or let's say the fact that you're capable of doing this, might indicate whether you can be a success. Okay? So if you pay yourself monthly, obviously, you're going to not make as much money. Okay? So I'll show you, and you should do your own math, by the way. You're deciding, should you pay yourself $10,000 a month or $120,000 a year? Okay? Or $30K a quarter. Does it matter? Does it matter if you pay yourself $10,000 a month, $30,000 per quarter, or $120,000 per year? Doesn't matter, guys. A lot. It matters a lot. Like more than you can possibly imagine. It matters. It matters so much that it actually changes everything. If you pay yourself $10,000 a month, you'll never make big money, ever. Okay? You got to find your way to pay yourself. Let's say if you pay yourself $120,000 at the end of the year, you'll make probably 200% more money than this, and probably 400% more money than that on the long run in year 5. Okay. In year 5, you're not making much more money. You might be making $15,000 in year 5 instead of like $90,000 if you did it this way per month, right? Of course, you don't want to make $90,000, so you have all that extra money for and you invest all that money. But it matters. The other thing that matters a lot is you must find a way, and if you can, you will be rewarded beyond your wildest dreams to go, let's say, somewhere between 3 and 5 years without paying yourself. Let me say it differently. Without taking money out of your trading account. If you can do that, you will make whatever you think is big money bigger than that. So how do you go 3 to 5 years without taking money out of your trading account? How do you do that? Yeah, that's one way, Ron. But it's not the best way. Yeah. Other people's money is the best way because now you're doing what you're doing. You're not exchanging your time for money. You're exchanging value for money. Okay? Okay? You can get a real estate job and sit around an open house on a Saturday and have 3 people walk through, and you exchanged, 6 hours of your time and made no money. You could be a bartender. You can mow lawns, or you can create value. Right? And if you want to be a Forex trader, the best way to do that is offer your Forex trading as value. And they don't pay you per minute or per hour, do they? Do your investors care if you work 1 hour a day? Think of it. So if you can be 100% focused on Forex and find a way to live off of the 220 model, or whatever you end up charging your clients, if you can find a way to stave off paying yourself, then you can get that magic that you need in the compounding. Okay? Because what happens is after 5 years of trading other people's money and you've been making a living, but now you got another 5 years of track record, and not just you trading your demo account or a $2,000 account, but you have a track record of trading other people's money for 5 years on top of what you were doing before. So now you might have a 7 or 8 year track record of success. Do you understand that? But now your account size is not like a couple of thousand. It might be $1 million. What could you do with $1 million of your own cash now? After 7 years of profitably trading, can you make enough money to live and to provide a better lifestyle for yourself and your loved ones and your children and your grandchildren? Could you take some of that money? So let's say in that 7th year, from 7 to 8, you grew it from 1 million to 2 million. Well, you're like, I got this extra $1 million I made this year. I don't even need $500,000 to live on. I don't even need $250,000 to live. So you pay yourself $250,000. But what do you do with the other $750,000? You use that as a down payment into a real estate investment that provides you net operating income. And you still have $1 million in your trading account. Your net worth went up. Your income went up. You see? And now you're in a virtuous cycle of more income than you possibly need. Right? Asset appreciation, which creates your net worth, which gives you an amazing credit. More now you got investment opportunities, and everyone says you're a genius, and you can do this, and you can do that, all that kind of stuff. Or you can make a quick $5,000 gambling on Forex, buy yourself a TV and a watch, and go have your friends tell you how cool you are. Okay, use your third eye. Right? Businesses invest. You need to see the future. You need to create the future. That means you need to act like a business, think like a business, and invest like a business. Tomorrow, I'm doing non-farm payrolls at fxstreet.com, not their YouTube channel, fxstreet.com. I'll see you tomorrow for non-farm payrolls. Monday's a holiday in the United States of America. There's no webinar on Monday. So have a wonderful weekend. Peace on earth. May the pips be with you. Your profits be above average. Think big, act big, get big, be big. Cheers. But stay small, stay humble.